Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario on the weekly time frame, where we're looking for a 5-wave impulsive structure to the upside, 1, 2, 3, 4, 5, after which the bull market is ended and we look for a bigger corrective structure to the downside. In this case, we are looking for our wave 4, a sideways corrective structure. The most common target for your wave 4 is between the 0.236 and the 0.5 Fibonacci taken from the low of 2 to the high of wave 3, giving you a target area between 57.1k and 42.8k, which as you can see is hit. However, most commonly a wave 4 is longer in time than a wave 2, and that is what the vertical lines here represent. If we take a fib time from the start to the end of wave 2 and then to the end of wave 3, comparing wave 2 with wave 4, then you can see this low is made before the 1-to-1 fib time, meaning that this corrective structure here with the low is shorter in time than your wave 2. So preferably for your wave 4, you end a sideways corrective structure after the 1-to-1 fib time, which is at least after the 12th of August. Now the invalidation for this scenario is the 0.618 at 37.7k. One of the scenarios on the lower time frames which can work is a potential flat structure in this case, where if we go to the daily time frame, we are looking for price to take out the all-time high and then move towards the downside afterwards. So we have a finished 3-wave structure in a wave A, look for a zigzag to the upside in a wave B, a 5-3-5 structure, impulse A finished, looking for B, and then another 5-wave impulse up in a wave C. Most common target for your wave B in yellow here is between the 1.236 and the 1.38 Fibonacci, taken from the start to the end of your wave A, giving you a target between 78.6k and 81.5k. After wave B, we're then looking for an impulsive structure to the downside in a wave C, and most commonly in a flat structure, which this is, A, B, and then a wave C. Your wave C tends to be very fast, very quick, very scary, high volume. So we want to see a very strong 5-wave impulsive move to the downside, moving below the low of your wave A at about 53.5k as a minimum target for your wave C. But what is more interesting as a target for your wave C is this range over here, which on the weekly time frame is a wave 4 of a lower degree. I'll explain it in a second. But pretty much your target for C preferably is between 49.1k and 38.5k. So if we then go back to the weekly time frame again, then what I mean with the wave 4 of a lower degree is that a wave 4 of a higher degree, which is the yellow count, as yellow is a higher 1, 2, 3, 4, 5, and inside the yellow 3 we have the green count 1, 2, 3, 4, 5. So that is a lower degree Elliott wave count in green. Most commonly your wave 4 of a higher degree in yellow tends to retrace to the price section of wave 4 of a lower degree, which is the green range that we then have over here, the green wave 4. This is an Elliott wave guideline. It's not a rule, but it is something that is common. Now your second scenario on the weekly time frame is your more bullish scenario, as here we are looking for a double 1-2. So we have a wave 1, a sideways 2, second wave 1, a sideways 2, and now we want to see continuation to the upside in a very big wave 3, easily moving above 100k, 200k, much higher targets to come. Now in this case, you can see that price has hit the 0.382 for support for this first wave 2, which is an uncommon target for 2, but a target nonetheless. But now again, we have a 0.382 touch, and as mentioned, the 382 remains uncommon. So it's quite unique that you have 2 wave 2s retracing very shallow to the 382, but it is a target nonetheless, right? If price does not move down into the wave 4 of a lower degree, it does at least give some probabilities to this particular scenario, because as mentioned, it is a guideline in Elliott waves that a wave 4 of a higher degree likes to retrace to the wave 4 of a lower degree. So if we don't do this, it does increase the probabilities ever so slightly for a double 1-2, where afterwards we look for a very big wave 3 towards the upside. And that is also the difference. After a double 1-2, we expect a wave 3 and we want to see a high amount of volume, big candles, big moves towards the upside, while in the previous bullish scenario, this one here, you're looking for a wave 5, then a bigger sideways range to form, and eventually price to move towards the downside. So here you want to see a bigger range forming between 80 and 140k pretty much, and here you just want to pump to the upside, and you don't want to have these very big sideways ranges forming. Now on the lower time frame, the daily scenario that fits with the double 1-2 is a low to be in here. We finished this sideways corrective structure in an ABC, hitting the common target for a wave C, the 1-to-1, absolutely perfect. And now we want to see an impulsive move to the upside. So we then have our wave 1, we have our wave 2, and we look for a big wave 3 to the upside. Common target for your wave 2 is now hit, the 0.5 to the 0.786 Fibonacci, taken from the low to the high of 61.8k to 57k. After a 3-wave corrective structure in 2, we then look for continuation to the upside in a wave 3, where we want to easily move beyond the wave B target for the bears, right? So this wave 3 should easily move above this target area. It's no problem to range here shortly, but we definitely want to have continuation towards the upside. The most bearish scenario, which is the lowest probability scenario, is that this move to the upside here is a wave C and then a flat ABC, but this is then a running flat structure. Wave C did not take the high of wave A, and a running flat is very rare, never preferred unless all of the other scenarios fill, and that means that on the daily, the higher probability scenario is a 1, 2, and a 3 to the upside, or an A, B, and a C to the upside. Now, as you can see, the similarity between the two scenarios is present, right? It is a 5-3-5 structure. The difference is the second leg up. If you look for A, B, C towards the upside, then we want to see a move down, but in the impulsive scenario to the upside, you have 1, 2, 3. So this part here is exactly the same in both of the scenarios, but then in a wave 3 you expect continuation towards the upside, right? So on the daily time frame, the highest probability scenario is at the moment at least a 3-wave structure for an ABC, and of course for the bulls, continuation towards the upside, but that is only something we can really look for once price moves towards the upside. Now, if we do look at least towards the downside, then we do have still some interesting support over here, a weekly order block between 50.5k and 53k, and also on the weekly time frame we broke out of this range here, and we haven't yet retested the value area high. So what you see on the chart here is 3 lines, blue, red, blue. These are the value areas of this range over here: value area high, point of control, value area low. And we broke out, moved towards the upside. And of course, if you are looking for a bigger wave 4, you can test this 49.5k area and then move towards the upside. Currently, price is nicely contained inside the support resistance areas in this range. You can see that we had a deviation moving back inside the range, and now we are retesting support once again. This white box is between 59.2k and 60.3k. So if you then finally look at the probabilities of the different scenarios, then on the weekly time frame, the probabilities are higher for the bulls. We are looking for a move towards the upside, either wave 5 or wave 3. It very much depends on price moving to the upside, taking out the all-time high, which is the highest probability on the daily time frame. And then if the all-time high is taken, the main area of resistance is the flat wave B target, and we then have to observe the reaction in that particular area. In a weekly double 1-2, we preferably continue up on high and increasing volume, right? The wave B target area should not offer too much resistance. We want to continue towards the upside. And in the weekly wave 5 scenario, the ending of the bull market, we preferably start ranging here for a longer period of time and then create a flat and move down in a wave C to have a bigger A, B, C, and then another move towards the upside to finish your wave 5 of the bull market. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.